The top business stories live from the Sky News City studio. A boost in household spending power as wage growth outstrips inflation, but the unemployment rate is ticking up. Grocery price inflation falls to its lowest level in more than a year. Plus another stock market switch from London to New York as the paper and packaging giant Smurfit Kappa compares its merging with its US peer Westrock. Good morning, this is Business Live with me, Ian King. We begin today with some breaking news on the bid battle for the Daily and Sunday Telegraphs. I'm joined now by our city editor, Mark Kleiman, who has more. Mark, what have you learned?
Yeah, that's right, Ian. An interesting development in the looming battle for control of the Daily and Sunday Telegraph newspapers. What I understand this morning is that Sir Paul Marshall, the hedge fund tycoon, who is a big shareholder in GB News, the right-wing news channel, has hired investment bankers to advise him on a prospective bid for the Telegraph titles. Now, people close to Sir Paul, whose wealth was estimated at £800 million by the Sunday Times Rich List this year, say that he hasn't yet made up his mind whether he will definitely bid for the newspapers or whether he will also try to bid for the Spectator, the current affairs magazine, which is also up for sale. But the fact that he's hired bankers, Ian, does suggest that there is a degree of seriousness to his interest. Now, just to quickly recap, of course, the Telegraph titles are being put up for sale after Lloyds Banking Group seized control of them from the Barclay family, which had controlled them for the best part of 20 years. We know that the Barclay family itself is trying to assemble financial backing to regain control of the titles. We know that Lord Rothermere, the proprietor of the Daily Mail, is also interested in bidding and is talking to potential financial backers. You also have David Montgomery, the former Mirror executive, who is also in talks to put a bid together. So what we do know is that there is a degree of interest in the Telegraph titles that means that an auction which kicks off in the coming weeks is certain to be a pretty hot one, Ian.
Mark, thanks for that. We're now to news that wages have outstripped inflation for the first time in more than 2 years, but unemployment has risen again. Well, this morning's release from the Office for National Statistics shows that wages, excluding the effects of bonuses, were up by 7.8% compared with the same month last year. That figure is in line with last month, but it was above the Consumer Price Index measure of inflation for July, which had eased to 6.8%. Meanwhile, the UK's unemployment rate rose from 4.2 to 4.3%. And on pensions, the rise next April could be 8.5%. That's because the triple lock means that state pensions rise by whichever is the higher in September out of earnings, inflation or 2.5%. Today's wage data means that earnings is highest. Well, our business correspondent, Gurpreet Narwan, joins me now. She's at the TUC conference in Liverpool. Gurpreet, I mean, the wage inflation data was bang in line with expectation. This rise in unemployment, though, is a little troubling.
Yeah, and it's a bit of a headache for policymakers because, on the one hand, wages are still growing robustly, and on the aggregate level at least, although it's not true for everyone, they are now outstripping inflation, which is likely to force another interest rate rise from the Bank of England. But on the other, it's pretty clear from today's figures that the aggressive rate hiking cycle that we've seen is really taking its toll on the labour market. As you said, the unemployment rate has risen. The economy lost 207,000 jobs in the last quarter, which is the biggest fall in employment we've seen on record outside of a recession. And forward-looking indicators like the vacancy rate also suggest that the labour market is cooling faster than the Bank of England thought it might, which means unemployment may peak higher than the bank was forecasting, and that's likely to take some of the pressure off wage growth, potentially bringing us closer to the end of the rate hiking cycle.
Gurpreet, obviously the triple lock is going to be an issue. William Hague in the Times this morning writing that there was a case for it to be abolished now. I mean, this, if it goes through, will cost the government another £2 billion a year.
Yeah, so, I mean, you've already mentioned it, but the triple lock, just to recap, it's the government promises to increase pensions every year by whichever is highest out of earnings, inflation and 2.5%. And it's the September data that it refers to when it's making the subsequent year's increase. And today's robust earnings figures suggest that the state pension could jump from just over £203 a week to £220 a week from April next year. And that's on the back of a 10% increase that pensioners enjoyed last year. So it's clearly an expensive policy at a time when the public finances are under quite a lot of strain, and it's forced the government now to really, there's a lot of pressure on the government now to really reconsider how sustainable the triple lock is. But of course, it's a politically sensitive topic, it always has been, but some Treasury officials are suggesting that the Chancellor may water down the earnings measure or the earnings threshold by switching it from total pay to regular pay, which means it won't include bonuses, and that's typically a lower, less generous measure.
Thanks, Gurpreet. Our figures published this morning suggest grocery price inflation has fallen to its lowest level in more than a year. According to the data and consultancy specialist Kantar, during the 4 weeks to the 3rd of September, prices across grocers were 12.2% higher than a year ago. That's down from the 12.7% seen the month before, and it's the 6th consecutive monthly decline since figure peaked at 17.5% in March. Well, joining me now is Fraser McKevitt. He's Head of Retail and Consumer Insight at Kantar. Fraser, good to see you this morning. I mean, the numbers going in the right direction, but 12.2% is still appreciably ahead of the headline rate of inflation.
Yeah, it's about half again against CPI, isn't it? So it shows just how much pressure our finances are under when we go shopping. And that's backed up by when we speak to people. So an incredible 95% of the British population are worried about rising grocery prices, which puts it as their number one financial concern. Right up next to the price of energy for their homes.
And as you point out in your report, there are still a number of food categories where prices are rising quite sharpish. Sugar and confectionery, eggs, for example.
Yeah, exactly. And frozen chips, if they're the thing in your household, they're going up as well quickly. Where prices are rising the slowest, it's actually things like butter, which you may remember had inflation of about 40% last year. That's come right down. And wines and spirits. So if you enjoy a tipple, prices are rising slowest on those. It's really tough for people out there. And that's why we still see people tending, where they can, to choose own label goods. And also, the discounters are still growing pretty strongly. Aldi and Lidl up 17% and 16% year on year, respectively.
Do we get any sense, obviously we had Aldi on the programme last week talking about their store opening programme. Their numbers are being driven by store openings, or are they actually growing their like-for-likes as well?
Well, they have actually opened their 1,000th store in the UK in the last week, and they've said that they are going to get to 1,500. Now, that is quite an ambitious and challenging target, but that's what they've stated out there. Yes, volumes are growing for the discounters, but it's not having it all their own way. We've also seen Tesco and Sainsbury's gain market share this month. So the traditional supermarkets are trying to have a little bit of a fight back. I do think we will see Aldi and Lidl growth rate slip a little bit as we come to the end of this year and into 2024. I don't believe, though, that the discounter party is over. I don't think they're going away. They've changed how we shop as a nation pretty permanently.
I thought that was a fascinating point you just made there in the numbers. Tesco and Sainsbury's appear to be putting a bit of clear blue water between themselves and the traditional two other members of the Big Four, Asda and Morrison's.
Well, it's very, very competitive out there. And I think both Tesco and Sainsbury's are working pretty hard at the kind of promotions they have at the moment that are linked to loyalty cards. So to get the best prices, you need to go in and use that Tesco Club card or that Nectar card. There is an added advantage for supermarkets in that, of course, because as soon as you use those cards, they have a little bit of data. And that is very valuable and useful for them in how they try and shape their ranges and what's on the shelf to keep you excited, interested next time you come into the store.
Another thing that jumped out at me from the till roll data this month is that Co-op's market shares really come off a cliff, down from 6.5% to 6.1% over the last year.
Yeah, Co-op had a very, very good early 2020s. They really helped us out during the pandemic when people were shopping locally and were not able to or were not allowed to travel much further afield. And it's very competitive within that convenience market because many retailers have their own versions of a convenience store. So, yes, they're under pressure, but they're continuing to, fight pretty hard for what they've got.
All right, Fraser, got to leave it there. Appreciate you joining me today. Thank you. Some other news stories for you now. And another FTSE 100 company is to switch its main stock market listing from London to New York as the paper and packaging group Smurfit Kappa confirmed this morning it's merging with its US peer WestRock. The deal brings together Europe's largest paper and packaging business with the second largest packaging company in the US. The combined business, which will be valued $20 billion, will be headquartered in Dublin and will have its main listing in New York. Well, the news comes after the building materials business Ferguson relocated from London to New York, and Flutter Entertainment, the owner of Paddy Power and Betfair, indicated it would make a similar move. The home improvement retailer Wickes has suffered a drop in profits due to restructuring and IT costs related to its demerger from its former parent company, Travis Perkins. Pre-tax profits for the 23 weeks to the 1st of July came in at £21.1 million. That was down 37% on the same period last year. But David Wood, the chief executive, highlighted a rise in sales and said Wickes was starting to see inflation ease in some key areas. He noted that timber, which accounts for up to 1/3 of the company's total sales, was now down significantly year on year. Wickes shares currently ahead by some 2.5%. And higher glass manufacturing costs and a big rise in marketing and advertising spending in the United States have hit half-year profits at the upmarket tonic water and mixers group Fever Tree Drinks. A pre-tax profit of £1.4 million for the 6 months to the end of June, compared with one of £17.9 million in the same period last year. That was despite group sales rising by 9% to £175.6 million, with sales growing in the US by 40%. Tim Warrilow, the chief executive, you might recall we've had him on the programme in the past. He cited new product launches, including blood orange ginger beer, as a driver of growth. Well, Wall Street's gains last night were followed by a mixed session overnight for equity markets in the Asia-Pacific region. There you go, see a picture. The Nikkei rebounding nicely after the sell-off on Monday. In Europe, stocks are also in mixed territory right now. Here's the current picture. The DAX in Germany off by 0.25% there. Nice showing from the IBEX in Madrid right now. Talking points in mainland Europe this morning include Pepco. That's the Warsaw-listed owner of Poundland. Its shares are off 1.5% after its chief executive unexpectedly resigned without any explanation. Well, here in London, the FTSE 100 is also in positive territory, up nearly 2/3 and currently on course for its fourth gain in as many sessions, led by healthcare and financial stocks. In percentage terms, well, the leading blue chip gainer right now is Associated British Foods, the owner of Primark, ahead by nearly 7.75%, and that is after it raised its full-year profits outlook for the second time in 4 months. To the downside, the specialty chemicals group Croda is off 1%. That looks to be on the back of a bit of director selling. Outside the FTSE, the financial services group JTC is ahead by 9.75% on a well-received trading update, but the defence contractor Chemring is off some 4.5% on news of a delay to one of its orders. On the foreign exchange markets, well, it's a bright and breezy session for the pound yesterday. It's given back most of yesterday's gains, and that's off just over 1/3 against the US dollar, more or less unchanged against the euro. The single currency, meanwhile, also off 1/3 against the greenback. Bit of a dollar revival today, bit of a dollar rally going on there. As for the oil price, well, that continues to trade at close to 10-month highs. A barrel of Brent crude will currently set you back $91.23 a barrel. That is up 2/3%. Well, joining me today is Alicia Forey, consumer analyst at Investec. Alicia, great to see you again. That update from Associated British Foods was quite striking.
Yes, and also the one from Fever Tree as well. I think both of those companies are really interesting this morning. And what's interesting is that they're talking about profit forecasts for not this year, but for next year. And both of those companies, I would say, surprised on the upside with regards to what the market was expecting. And that's, of course, due to falling freight costs, falling input costs, all these things that we've been talking about as tailwinds. We're now actually starting to see that play out in some of the company's guidance.
Well, it's a busy sector in your patch right now. There's not a lot of M&A going on at the moment, but your sector, consumer, there's been a host of it. We had a big takeover in the US yesterday. It was quite interesting. Hostess Brands.
Yes, that's right. J.M. Smucker has agreed to buy Hostess Brands, $5.6 billion deal. I think what's interesting is that although interest rates have been high for some time now, the pace of deals continues to happen in consumer. Perhaps not the magnitude that we've seen in previous years, but certainly the pace. And in addition to that, we've had a number of other deals happening in the US and also across Europe in the consumer space. And multiples have been pretty firm, actually, on those transactions. So although interest costs are higher, the valuations that targets are getting in these types of transactions have been holding up pretty well.
Yeah, I mean, one of the striking ones was Subway, which has been family-owned ever since it was launched in the 1960s, being bought by private equity.
Yes, it just goes to show that there's a lot of money out there that still sees good value in the consumer sector.
Do you think consumer... I mean, obviously, this was a private company, but do you think the listed consumer space valuations have been a little lacking, and that's why you're seeing this interest?
Well, certainly, I think in the UK market, the consumer sector is undervalued by and large. Parts of the European consumer sector as well, parts of the US sector, consumer sector. But I think there's a wider range, I think, that you're finding in the US and in Europe, where you're seeing some consumer companies still valued very highly and others have derated. But in the UK, across the board, for the most part, consumer companies have derated from previous historic ranges.
Now, what about inflation? Your job must be quite difficult at the moment, trying to make sense of how inflation is coming down, because we're expecting a blip with the latest numbers, primarily because the oil price is high. I mean, how does that impact consumer spending going forward, do you think?
Yes, so we are expecting, because of that petrol impact and of course the wage growth that we saw, another data point supporting strong wage growth this morning, of course. That all feeds into services, which feeds into inflation. So we are expecting a little tick up in the August inflation data when it comes out later this month. But then after that, I think it's pretty unanimously accepted that inflation, which has been falling since May in the UK, albeit less dramatically than it has in the US or in the Eurozone, but inflation is still coming down in the UK. So we'll have this blip, but then it's likely to revert back towards its downward trend, meeting the government's objectives of halving inflation by the end of the year. So what that means for consumer spending power, well, clearly wages are still strong. That's helpful for spending power. And of course, on the other hand, unemployment going up is obviously a slight counterbalance to that pressure. But basically what we're seeing across the consumer space is a pretty resilient consumer, both in terms of consumer goods and on the high street.
Positive note on which to end. Alicia, good to see you again this morning. Thank you.
Thanks.
Still to come here on Business Live. Record half-year results at the fintech payments group Equals. I'll be joined next by its chief executive. Don't go away.
I'm Katie Spencer and I'm Sky News' arts and entertainment correspondent. When you think of Glastonbury, it's mud you want and music. They're going to cross to us live in a minute. Okay. Thank you so much. Brad Pitt is now a prolific producer behind the scenes.
It's not a mystery to me. We always were capable of doing this.
Oh, they're wonderful children as an audience.
Who did that? Maverick here on the red carpet. I'm so excited, Tom Cruise. This is the story of the night.
It's the little independent film that could.
We take you to the heart of the stories that shape our world.
Nor have I ever struck any woman in my life.
There's this illusion of power.
Are you feeling well?
I remember covering the Oscars and that now infamous moment, the Will Smith slap. Nobody could quite believe that it happened. You can tell from these crowds just how excited people are for the return of Pride.
These actors playing the lead roles were born long after the Sex Pistols broke up.
Are you pleased that you did say yes to the job?
I've never regretted it.
As a team, we've interviewed some of the biggest stars in the world. It can be incredibly surreal being swept up in their world, but we try to give you an honest sense of how these people really are.
Okay, I'll talk to you.
Don't leave me.
Yeah, okay.
There's no easy goodies. There's no easy baddies.
I've had a great time here.
Thank you.
Thank you.
Bye.
The pound has rallied. Moderation, interest rates peaking at
Up at 6%.
The highest for 14 years.
Will that be the peak? Will it be a little bit lower?
It's closer to a potential crash.
So many words, so many meanings. But what do they mean for you and your finances? Stay up to date on Sky News.
It's like Emirates. It's like better. Fly Emirates. Fly better.
Thank you.
Welcome back. Now, rising transaction volumes, new customers and acquisitions have all combined to help the fintech payments group Equals to record half-year results. The company, whose products and services include international payments in more than 100 currencies, reported adjusted earnings of £9.8 million for the 6 months to the end of June. That was up from £4.9 million in the same period last year. Well, joining me now is Ian Strafford-Taylor. He's Chief Executive of Equals Group. Ian, welcome to you. What's driving growth in transaction volumes right now?
Mainly coming from larger corporates. We started off targeting smaller, medium-sized enterprises. Now we're attracting bigger corporates because we can connect to them via what's called an API, which essentially is our system directly into theirs. So that's really the cream that's driving the big numbers.
API, sorry, you better explain that.
It's a technical integration where our systems can talk to a company's systems without human interaction. So they're like directly connected, host to host, if you want to think of it that way. So larger corporates prefer to integrate in that way. We're now able to do that, where we weren't about 6 months ago.
Right. It's quite an interesting development, this for you, because I mean, most people associate you more with SME customers. Is your customer base sort of moving up the corporate food chain, as it were?
It's not one or t'other. We're now able to service the larger ones while still doing SMEs, and they are our bread and butter, and we have great products for them. So if you take the SME proposition that we have and add some bells and whistles and more flexibility, ability to bespoke it somewhat, then you get the solution for the larger corporate.
How would you characterise the mood among your SME customers right now? I know that's a sweeping generalisation I'm asking you for here.
Battered, I think. Is there's a lot of stuff to contend with, isn't there? Inflation, interest rates. I think also, when the Ukraine conflict started, we all got used to sort of just-in-time type philosophy that, something will arrive just in time when you need it. And so there's been a load of restocking, there's a lot of inefficiency in supply chains now. So they're suffering, but, there's always a way through it. People are working through it. But it takes time for that ripple to come through. So batten down the hatches in many cases for SMEs, but they're getting through it.
That's a reassuring comment there. I mean, actually, that should, in all other things being equal, lead through to higher business activity across the piece if they are restocking depleted stock levels.
Yeah, I hope so. And, from the limited access that we have to what we see, then I expect so, but there's a lot of very wise economists that might disagree with me. But you know, we're hopeful based on what we see. I mean, our underlying core businesses, forget the larger corporates, as I mentioned earlier, are robust and growing. So from what we see, we're hopeful.
One thing that I noticed in the numbers, your staff costs during the period were up 18%. I know you've been doing some acquisitions, which we can talk about in a moment, but are you having to pay more to retain talent?
I wouldn't say we're having to pay more to retain talent. We introduced share ownership schemes, so most of our employees have shares in the company, which is a fantastic thing. We do take note of inflation. We have an annual pay round. It wasn't exorbitant at all. So mostly what you're seeing there is either acquisitions, as you mentioned, or just hiring people. We are hiring, unlike a lot of people in our space that are consolidating. We're hiring. I think we've got 22 open positions out right now.
Now, the big news in the last month is that you have completed an acquisition that takes you deeper into Europe. What was the thinking there?
Essentially, you know, post-Brexit, it was very hard to do business there and getting harder, if anything. So we always wanted to move into Europe. We needed a company that had licenses, or we could have applied for licenses ourselves, which would have taken much, much longer. And this particular company, if I had a template of the licenses I wanted and the interactions it has and the banks that it has, this would have been it. So it's a perfect fit for us. Very excited about it. It was called Unex, now renamed Equals Money Europe. We've sort of absorbed the people there into our culture, put nicer offices there that have our kind of vibe to them, and I'm delighted about it. So by the end of the year, it should be fully plumbed in and functional the way that the mothership is in the UK. So hopefully good things to come there.
OK, Ian, we've got to leave it there, I'm afraid. Busy day for your results day. We do appreciate you sparing the time to chat to us. Thank you.
Delighted. Thank you for having me.
Now, just before I go, a bit of breaking news to bring you that comes from Pakistan. 5 children who travelled to Pakistan with Sarah Sharif's father have been taken into custody. The children aged between 1 and 13 were recovered from the house of Sarah's grandfather in the northeastern city of Jhelum yesterday. Obviously, Sarah Sharif's death at the age of 10 under investigation by the police in this country. Well, that's it from me for the time being. We'll have more on that story throughout the afternoon here on Sky News. And I shall be back for our afternoon edition at 4:30. Hope very much to see you then. In the meantime, do stay tuned, because coming up after this short break, it's Kamali Melbourne. Thanks for joining me this morning. Cheerio.